Well, indeed, it's the fifth month, I beg your pardon, of the year 2020. And at the start of the year, most investors expected the 11-year bull market to continue in 2020. Well, only to be shockingly disabused of the notion by the spread of COVID-19. As a result, many global stock markets fell from record highs to bear market territories. In a matter of weeks, investors need a way to price in risk, and as at today, there are simply too many unknowns surrounding coronavirus for investors to predict the economic impact, leading to fear and extreme volatility. The governments, Wall Street, and the rest of the world wants to see the virus contained. Until it is, risk assets remain vulnerable to additional sell-offs. However, there are some bright spots. The news across other risk assets point to earnings weakness in the first quarter of 2020. For example, Nike relies heavily on China for its production, igniting fears of an earnings dip due to supply chain disruptions. Investors around the world are adopting strategies that benefit from volatility. Volatility can provide an opportunity for market-beating returns. The key is employing a strategy that allows you to make money in volatile markets, regardless of which direction they turn. And to maintain the integrity of the Nigerian market, and in order to focus to continue to stimulate economic growth, the management of the NSE activated Business Continuity Plan on March 23, 2020. Through this activation, the local boss continued trading during nominal hours and days by providing remote trading access for dealings member firms through FIX protocols and virtual private network platforms. The resultant effect or impact of this is that the capital market has witnessed positive trade patterns. Many blue chip firms has recorded price increase despite the low volume of trade. The market year to date currently stands at 21.05%, an indication that the market's fundamentals remains weak. I have joining me now live in the studio is TVC News market editor Effiong Ekop is my colleague, and I also have joining me via Skype from Maryland here in Lagos, a financial analyst, Mukhtar Mohammed. Mukhtar, it's great to have you gentlemen join us on the show. But I'll say hi to Mukhtar because it's been a while we actually spoke.
Hi, Tolu. Happy Workers' Day.
I wish you the same. And Ekop is also here. Ekop, it's great to have you in the studio today. Thank you for your time.
Thank you, Tolu.
Let me start with Mukhtar. I want to start with the move made by the NSE to continue trading, remote trading. We saw it that even at the time of the lockdown, which still continues, trading continued. What do you see to this?
Fantastic. I mean, they did it. And in short, we traded from home, from my house and everything. And it was seamless. There was no any issue. It has been perfect since that day till now. I think the guys in the NSE has really made us know that Nigerian Stocjk Exhange, Nigerian is also world class. There was no disruption. Everything was seamless in terms of trading, in terms of deal. The guys in the Security and Exchange Commission also did their own work, and it was fine. Even investors that really wanted to open accounts, the guys were available. Nigerian Stocjk Exhange, people were still opening new stockbroking accounts, and within 24 hours, they had those accounts open. It was a fantastic time. It was something that you're so proud of, that you are in Nigeria when you see that our stock exchange is behaving like every other world-class stock exchange in the world.
All right, then let me turn to Ekop. The week's trade has actually largely been positive. Now, what fueled that condition when COVID-19 actually dominates the society?
Two major issues could be adduced for that purpose. Number one, you see that this is the time that quoted companies have to bring in their first quarter results to the market. And indeed, so many of them have done so, especially the banks. So it is natural for strategic investors to respond to the results that quoted companies have pushed out. But beyond that, hearing and seeing the performances, they appear to be somewhat attractive. And that influenced stock prices a lot. So securities values have gone down, and indeed many of them have really bottomed out. And if you are a keen player in the markets or even a keen watcher of the market, you know this is the best time, to key in to those stocks that you have always wanted. That reason is why we see so many of the transactions staying positive, throughout this particular time, which is in contrast to the fear that we have out there in the larger society.
Mukhtar, let me throw it to you. Before I came on air, I saw it clearly on CNN. U.S. stocks begin the month with losses. So we've seen losses across board as the figures continue to come in on daily basis. Now, how does this come to you? You're a player in the market. See what's happening globally and what's been happening here. How long or how do you see us waving through this storm at this time?
Well, how long is all determined by other policies. Micro policies also have to help the market. The market itself has a life of its own, like Mr. Ekong said in your studio. The market that defied all odds during the COVID-19 incident. And basically this happened because most investors also received their dividends during this period, whereby they had the Security and Exchange Commission and the regulators allowed quoted company to do virtual AGM. So most of them received their dividend during this period, and some of them, of course, were plugging back the dividend into some of these good stock that they received. So that could be one of those things that were responsible for the kind of movement we saw in the market, or the time of perception our market has had. Now, if you say going forward, how do we invest this time? How do you look at it? Do you think it is continued? Do you think what should be done? Basically now, any investors should begin to look at the long-term prospect of the market. And this is the time, like Ekon said, to buy very strong fundamental stocks that have given value over the year. This is the time where you see investors do what we call value investment. Value investment is you invest for value and you look at the long-term future of some of these stocks. Unfortunately, like he said also, most of the stocks are selling at the lowest time they've ever sold. Some of them are the lowest 52 weeks. Some of them are maybe at the lowest they've ever sold for like 10 to 15 years. So there's no better time for investors like it is now. And also, going forward, when you look at the strategy, what are the strategy, what are you looking, what are you seeing? You see, COVID-19 will come and go. The market will remain. So at a point in time, the water will find its level. And when the water starts finding its level, it's those stocks that are giving good returns, strong fundamentals that will start gaining. Now, you could see that most of the quoted companies, we're not going to see so much. If you look at the first quarter result that came out, it looks very good. Because remember that this thing happened towards the end of the first quarter. So before we begin to know where some companies stand is during the mid-year result, which is the second quarter result. Then you begin to know where some companies stand. But there are those strong fundamental companies that still give interim dividend. If they are still able to give interim dividend, which I think they will, then that will be a boost for the market.
Beautifully put out there. Back to my colleague here now, Efyong. The banks took clear leadership in trading patterns. Why are banking securities so attractive to investors even at this time?
In any market, the banks are actually the ones providing securities. And so here in our own markets, they are not doing differently. Many of the banks are really what you may call market makers. They support the market very seriously. And when there is problem of liquidity, other companies, they turn to them. So it is natural that investors, dance around banking securities. One, again, it is very, very easy to enter banking securities and indeed very easy to, get out in terms of the, problems that you may envisage in the market. So that explains that any investor at every time will always want to have some securities within the banking, sector added up to all others. In the sense of any problem, you quickly sell the banking securities and then reshape yourself. Either you stay or you get out. So that's the reason why you see banking securities being very popular. Apart from that, many of them, on the average, have been performing well and taking care of their shareholders, so it is natural to attract their attention.
Mukhtar, banking stocks, we've always seen them as a very liquid stock, saying, looking at that sector. But moving a little away, while you touch on the banking sector, I'd like you to also look at the oil and gas sector, which is one sector that's always attractive to me because it's still the mainstay of the Nigerian economy. We know what's happening to the price of crude. We know what's happening globally. Even at the moment, there is overstock. There's glut everywhere. We have the products on the sea and nobody even wants to buy because there is production not going on in most of the countries, even in Asia and America. Now, what do you expect with regards to trading of stocks in that sector vis-a-vis the banking sector?
Well, you said it all, Tolu. If you look at the oil sector, we have two major active players in that sector at the moment, which is Seplat and also Owando. And Owando, you know, Owando had a lot of crisis so much. So you only saw the price increment in the share price of Owando just because of the price, the low nature of the penny nature of Owando. You saw a lot of improvement in terms of price movement, appreciation in Owando. And after some time, you saw those prices depreciating because investors not taking profit because of the penny nature of Owando stocks. But when you look at Seplat, then you look at what happened when the result came out. The result is not good. So, and you saw Seplat also almost drawing the market down, except with some high stocks like MTN and others came to save the market index. So that is what we expect from the oil and gas sector. It's this tough period. It's still going to be tough. And even in the marketing expert, even those like Mobi and others that listed their marketing aspect in the exchange, you still believe that those companies will also not be able to make so much because people were not going out, people were not consuming fuel, there were no fuel consumption of our cars. The only one they enjoy, maybe some people do spare consumption in terms of their generators. And somehow PHCL was a little bit fair in some areas. So it's not, you see that impacting on their first quarter, on their second quarter, and even going forward, because we don't expect to be stability in the oil market until maybe towards the fourth quarter or the beginning of the new year. Now, when you look at the banking stock, number one, liquidity, what investors look at, and secondly, again, investors look at regulator. The regulator of the banking sector, the CBN, has been up and doing so. Investors are confident with the numbers that comes in from there, and also the liquidity ratio, like Mr. Effiong said. Now, if you look at even, he talked something about the market makers, and you realize that the Nigerian Stocjk Exchange also decided to do security lending. And if you look at those security lending, you realize that 40% of the companies that are listed there are banking stocks. You see Union Bank, you see GTB, you see UBA, you see First Bank, and others are also listed there as security trading. That is the kind of confidence that the exchange have in the banking stocks because of the liquid nature of this and the consistent dividend payout. There's only the banking company and banking stocks and those banks that we said have paid consistent dividend, even when the times are down, when the times are good, whether the times are rough, they definitely pay dividend. And what really triggered the Nigerian market, the average Nigerian investor is a dividend investor. So normally they go to those stocks that they know they will get something at the end of the financial year or at their middle year.
That's really very important. Let me turn to Effiong now, who's with me in the studio. Effiong, we look forward to a gradual process of government unlocking the economy. Now, I'm worried because many are still talking about the figures coming in and talking about opening up, that it might not just be the right move to make, but what governments have the final say. What picture of the stock market do you see as we move on?
Well, going forward, I see the Nigerian market staying very close to what we see in the global sphere. So it is a market that will continue to internationalize its activities and then linking up with its counterpart outside and then bringing the same experience down to local investors. And I also see a market that will provide opportunities for new entrants into the market. Don't forget what I said earlier, that securities have bottomed out, and that creates opportunity for those who have not even been playing in the market, to now come in. Those that have been playing the market, they have right an opportunity to even stay and make better investments in the market. Beyond that, I also see a market that will stay cautious. Regulators will need to tighten up, their own rules and activities. Then investors and stockbrokers, somehow the fear will always be there, playing around them. So the way to navigate that, to circle and take the opportunities that would exist, those are the things that I see that will happen in the stock market, coming out of this present condition.
Mukhtar, take it from there. Talking about regulators, they have a big role to play here now as we move on in 2020. What are your expectations from them? And as we expect a gradual easing from Monday or 4th of May, what are your projections for the Nigerian capital market in focus?
For the regulators, I think they've done well. They will up their game because of the times and season that we are. But I think they've really done well, and they've shown that they move with the trend. They are becoming a world-class regulator. So I don't have a problem with the regulators. The stockbrokers also have proven over time now, especially during this lockdown, that they could be trusted because almost everybody, every stockbroking firm was doing their trading normally. It was sleepless. So for me, I think we have world-class exchange regulator, and we also have a world-class stockbrokers now in Nigeria, and that is good for the market. That is good for market confidence. Now, what are my projections? My projection still is all based on perception and demand and supply and regulators' utterances. Especially what will determine the movement of the Nigerian market is going to be the regulator utterances. Now, utterances can come in form of talk. It can come in form of policies. Now, what is the challenge? Who are the big movers in the Nigerian market? They are actually the foreign direct investors that comes into the Nigerian market. The foreign investors, they're the ones that move the market now. Are they coming in now? No, they're not coming in. Would they want to come in? They want to come in. When do they want to come in? They want to come in at a good price. What are those factors they are looking at? They are now basically now what they are looking for is, will the Naira be devalued beyond this level? That is what the only thing they are looking for now. That's why they have not come in. So that is a major challenge. Now, the import-export windows that was created, especially for investors, has been fantastic and is still doing very well. But I see a situation whereby the two-way liquidity of that space will be tested during this period. So basically, the market will move, but it all depends on what comes out from the government. What are the policy in terms of investment policies? Now, we are in a trying time as a nation economically, and investors also in a trying time. The stockbrokers, through their regulators and through through one channel or the other, have been asking for tax reduction, VAT reduction, and I think this is the time that the government needs to come in and save that sector of the market, because the barometer of any nation's economy is being viewed through the stock market. And this is a market that if there's any sector that has been worse hit and have not gotten any palliative from government, is the stock market. Because you remember at the first week of the pandemic, both the pandemic and also the issue that came with the low oil price, the stock market lost 1.5 trillion in a given week. So they need a lot of palliative, they need a lot of incentive from the government that will attract investors into the market, especially institutional investors, that I mean local institutional investors and Nigerian retail investors. Those are the things that will mark the market going forward. The utterances, the policy, and will the Naira be devalued further than, remember, the CBN already pegged it at 380. Will we go further than? People are saying get to 400, and even in the parallel market, as per Friday, it was selling for almost 460. So these are part of the things that will determine the direction of the market going forward, especially for the short time compared to the long term.
Financial analyst Mukhtar Mohammed, thank you very much. It's really good to see you. And also
yes,
my colleague.
Even if you have forgotten me, I'm
no,
here,
no.
So remember me. If you don't talk more like a stockbroker, I think you should just go and become a stockbroker.
No problem. Thank you so much. My colleague is also here, Efyonge Cup. We'll still be in the studio. We'll continue the discussion even after now. Thank you very much, gentlemen, for joining us on Business Nigeria.